Wednesday, February 8th, 2:46 p.m. New York time. Good afternoon. Recap of my day trade I took this morning on the SPX using options. Looking at the desktop trading platform Thinkorswim. This is the option chain. That's the stock symbol, SPX. The contract was today's, 8th February. Expires today, ceases zero. And I did a bullish trade, bullish put trade. That's on the put side over here. These are the strikes. The strikes I used was 41.25. There's a vertical. And 41.20. I placed this trade at 10:13 a.m. There's a bullish trade again, placed it at 10:13. And it went against me, and I closed it at 10:30. Good money management, not staying in bad trades. So when I placed this trade, that 41.25, which was a short strike, at that time, that delta, which is now 61, that delta at that time was 25. Now it's 63. That's terrible. Thank goodness I got out of it. But also, when I got on the trade, I collected $100 per spread. Well, now it's almost 300. Yeah, that's bad. That's more than double against me. Again, thank goodness I got out of that trade. It's ugly now. Let's look at the charts. Right here, we're looking at the daily chart. It's an inside candle. So we didn't take out the range of the high or low of yesterday. Still sitting inside. That means indecision. It's also an consolidation phase here. And still have about it's like hour and 15 minutes, give or take, before the market closes. On the S&P 500 futures, yeah, the trend's down. And there were some buyers here at the 41.25. And certainly is the selling up here. Let's go into the 15 minutes. So on the 15-minute chart, when I was looking at it for a trade idea, I sat on hands, I waited. That's the first 15-minute candle that opens at 9:30. It's done 9:45. And I'm saying, wow, that looks like a fake out. Yep, just a huge wick that early already. Second one, inside candle, sat on hands, waited. That means indecision. And then this third candle, well, we had tested the low of that inside candle, but I wasn't trading bearish. I just sat on my hands and waited to see if we're going to sell off more. And then when it's getting closer to getting done, start to get that wick. I'm thinking, okay, this candle might break out to the upside before it gets done. Because seeing these huge wicks, buyers. But again, we weren't making higher highs. See, each one had a lower high. That's not good. And then I got in, like I mentioned, at 10:13. Shame on me. I didn't wait till that candle was done, nor did the trend reversal. Shame on me. So the next candle, it actually went a little bit higher, and I already had $25 per spread as gains. Yeah, I should have closed it, but I had a working order to take 50%. So I should have closed it early. Shoulda, coulda, woulda, but I didn't. So that gain, I already had $25 for each spread. That was really fast, that gain that occurred. It closed. And when I saw that close, I'm thinking, wow, that might be a stop hunt. It's in consolidation and didn't break down yet. Still was in the trade. And then at 10:30, which during the second 30-minute candle gets done. And also that's a 1 hour candle that's completed. I didn't like it. Yeah, it was going just the way I saw it close. I closed my long, my bullish trade. Thank goodness. But in hindsight, I wish I would have entered, placed the bearish trade. Yeah, yellow hours where I went long, and red is where I closed it. This yellow hour is just showing the stop hunt candle. And when that got done, yep, like I said, in hindsight, I wish I placed a bearish trade there after it was completed. Now look at that, went lower. So this gray horizontal line was my short strike. It got tested again. I would have been in bad shape if I stayed in that trade. Yep, it's still below it. That's not good. Show you also the 9:30 a.m. when the market opens. I label the 8 deltas on both sides, the call and put. So up here, the calls, here's the 8 delta. If you don't know, 8 delta is 2 standard deviations. So look, this never got tested. And down here, the put 8 delta never got tested at 9:30. And then the high, blue horizontal line of yesterday, and the low of yesterday again was never tested. Interesting. Let's go look at the 5 minutes. There we go in the 5 minutes. So again, that was the consolidation. That yellow arrow is pointing where that stop hunt was formed. And look at that breakout. That's where I'm disappointed that I didn't just switch sides. I do that sometimes, switch sides if I'm wrong, get out. And then the other one either makes me break even or maybe make more. So certainly would have, that would have been a winner trade. Yep. So again, that yellow candle on the 5 minute was the entry and the exit was here. This one. So that being said, 2 things I could have, well, more than 2 things, but again, looking here on a 15 minute, the better thing would have been done is wait until after that 15-minute candle, that bear stop hunt, and then get that confirmation lower low, lower high, which is this candle, if I was using the 15-minute. Yeah, so I would have to wait till this got done. So I wouldn't be getting the trade till this candle came. And this candle starts at 10:45 a.m. Well, one concern is later in the morning, certainly in the afternoon, the premiums are less and strikes are closer. If you ever trade options, you should understand that that's another risk you take. The lower the delta, the further away, but when there's less time, they're not so far away. So I'm going to show you what I'm talking about. Again, this delta here was 8 delta at 9:30. The call delta. Well, let's see what it is right now. Oops. Cue this out. The 8 delta. Going to open this up to a little bit more. Again, this 8 delta at 9:30 was a 4,200 strike. So we look at the calls. Calls on this side, and we're going to look at the 4,200 strike. There we go. 4,200. That's 0 delta. That's good on that side. But if I was going to do this side now, and let me show you this too. The 8 delta now, that's the other thing I want to show you. The 8 delta now, the calls are here. 41.45, 41.45. Let's draw the line, 41.45. There you go. Let's put that there. Big difference. So at 9:30 a.m., the 8 delta here, see how far away it was from here? 41.58. Say that high was 41, actually, when the market opened there. So 41.53 to the high of 4,200. That's about 47 points away. Versus now, this 8 delta here, 41.45 minus the current underlying price, 41.21. That's about 24 points away. So that's the point. Got it? Early in the morning, the lower delta, there is more strikes further away, but now this 8 delta is closer, so it's a higher risk being touched. Even though it's that low delta, that's a high risk. So that's not the advantage to want to trade these options that expire at the same time to let's get more premium credits. Yeah. Going on. Let's look at the other side now too here. 40.85 on the put side, and then we'll finish here. 40.85. Here's a 40.85. That delta is now 2. And it looks what the current 8 delta is. The current 8 delta is 4,100. 4,100 would be here. Yeah. Yep. Disadvantages each way. Got it. Okay. So we'll finish this here. I just seen on the 5 minutes the opportunities using, again, the 15-minute or the 5 minutes or multiple time frames to wait for that confirmation. Consolidation, fake out, breakout here on that 5 minute, and still could have won because the trend went down, the premium would have melted away. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.